Hey, what's up, friends? Welcome back to the YouTube channel. Happy Father's Day if you're a father. And also, I must acknowledge the women too. Thank you for supporting all the fathers and all the men. So I hope you had a wonderful weekend. I know the weekend is rounding up, and tomorrow we'll have trading again till Friday, except for those that trade crypto. That continues even during the weekends. And then synthetic indices that also trades during the weekends too. So I'll try not to make today's analysis so long. I know usually they're quite long, but it's because there's a lot to look at, and the knowledge of these things is not just on the surface. Gold is something that is usually beneath the surface. It's something you need to like go deep in order to get it. So with that being said, let's get right into it. I'm going to try and focus on Euro USD and Pound USD today. We'll just look at what has happened so far and what we can expect in the coming weeks. So let me just go straight to the Euro USD pair on the monthly chart. We always try to look from the bigger perspective to the smaller perspective. So on the monthly chart, we had this pull down, a large pull down, then a pull up. So with that mindset, our thought has been so far that all the rise we're seeing so far, that the general trend is still supposed to bearish. That means it's going to, we're expecting that in a monthly time frame, it's going to turn around at some point and come all the way down. However, presently it has been pulling up and ranging within the 38 level and 50 level. This is for the Euro USD. Now, this current month seems to be pushing up once again, just like some previous months, and we don't know if it's going to push up all the way to the 61 level. Just looking at the um, pound USD on the monthly chart, I noticed that something that has not happened in a long time, in fact, that has not even happened before, seemed to have happened on Friday, which is that the the same kind of pattern on the pound USD, but when it pushed up on Friday, it actually went as high as the 61.8 level. So this is the first time on the monthly time frame this push up. Now it has actually gotten to the 61.8 level. So this is a new thing that has just happened. Now, whether it's going to continue all the way up, you know, we don't know yet. But it's good for us to take note that it has actually gotten to the 61.8 level. Usually, what follows when the market hits this level is a massive drop. You get so it may drop back to the 50 level and drop all the way down, or this may just be the beginning of it, the market telling us that it is not going to turn around and it's going to continue all the way up. The first target, I'll get to that shortly, but the first target is around from where it is right now, the first target we can anticipate is the 2.90, about 2.9 level, which is about roughly about 100 pips from where it is right now. However, I will get back to that. Let me get back to the Euro USD. So on the Euro USD, it just came back to hit the 50 level on its own level. And like I said, this one just came back to hit the 50 level. The other one for the first time just hit the 61 level. So honestly, I'm looking at some pullbacks on both of them in the short term. If we go to the weekly chart for Euro USD, we can see what happened. We had a doji, a confirmation, and we had a major buy. So just looking at it this way, the next level of resistance since that we may be expecting maybe somewhere around the this is on the weekly chart, which is also roughly about 100 pips from where it is right now. Nonetheless, we go to daily chart to look at it. This is how it looks like on daily chart. So on daily charts, we have this kind of W pattern at the base here. Usually in a W pattern like this, when you see this kind of movement, a lot of times it goes all the way up to the top of where the W pattern began. Okay, so that means that for Euro USD, there's actually room for it to actually rise some more and get to this level. There's actually room for it to rise some more and get to this zone, you know. So we'll be looking out for that. Um, Now, if we come lower, look at that lower. This is now daily. Now, there's what you call the Elliott wave theory. I won't get so much into it, but what it says is that when the market is doing an impulse move, meaning a move that is what's the best way to do it now? A move that is forceful, powerful in one direction, clearly in one direction, like what we had here, this kind of move. That usually that the market does it in a five-wave pattern. Maybe on your own you can go study about the alert wave, but I don't want to go too much into it. But in that five-wave pattern, you usually have wave one, wave two, wave three, wave four, wave five. I think that presently, now this may not hold, but I think that presently we have done maybe something like a wave one, wave two, wave three, and we're probably going to start seeing maybe something like a wave four right now. So that may hold, that may not hold. But what wave four is that it's a period whereby the market pulls back a little, just the same way like wave two. It pulls back a little, maybe ranges for a while before it finally finishes in the wave five to exactly where it's targeting. So I am actually thinking maybe this week we may actually have some days of maybe sideways before a breakout. Or it may just go all the way up maybe before some pullback. We don't really know exactly how, but we know that for now the market is buying. So we'll be looking for opportunities to buy. And the next level of targets we're looking at is this another 100 pips above, you know, most likely almost all the way up. So these are targets that one may have on the daily points. So these are like short-term targets that one may have. So places to look out for. So that's that for the daily time frame. It's clearly a bullish trend, so look for opportunity to buy. On 4 hours, we come down all the way to 4 hours to look at what's happening there. On 4 hours, this is how it looks like. You can see a clear pattern of bullish rise. So if let's say we start having pullbacks, this level here can this low here can for now act as a temporary stop loss for any pullbacks. This low here can act as a temporary stop loss. So except you just want to scalp and take short stop loss, this is supposed to be like the actual stop loss, this low here. So if the market decides to play out in that range pattern of sideways for the wave four, which may take a couple of days, because if that's going to be wave four, it may actually take a couple of days to happen. It may be the market may be going sideways for the whole of next week, this week that's about to start. So maybe doing that, or it may be a fast one and just does that 2 days or 3 days, then breaks out. So we'll see how that plays out. Or at the same time, it may have hit the 50 level and just decides to turn around. You get so a break of this low here will be giving us an idea that the market is no longer planning to continue up. So at that point, that's when we start watching that, okay, maybe the pattern has turned. Any pullbacks that is higher than this level, I'll suggest we take buys. Use this as opportunity to take buys, you know, and while it's ranging like that, use that as an opportunity to scalp the market as many times as possible and then make as much as you can while taking note of temporary, this is like the stop loss. So that being said, let me look at the pound USD. The pound USD. So on the monthly chart, we have it just hit the 61 level. So it's somehow like the same thing too, you know. Now going to weekly chart, let me see what's happening on weekly there. Okay, so on weekly we have it kind of like a clear, wow, clear bullish trend on weekly. So using the weekly, there's what you call Fibonacci extensions. These Fibonacci extensions, the Fibonacci numbers and the theory behind it. What basically these levels do is that they kind of give us an idea of levels that when the market is moving, where it's likely going to face some kind of pullback, the likely next targets. So on the weekly chart, I just use the Fibonacci retracement here to draw a line, trying to see, okay, where is the next target? Now that it's buying, where is the next target? And the next immediate one is the 1.618 level. You get. So that 1.618 level collides with about the 2.9 level, which is about 100 pips from where it is right now. So if you're looking at buy, and see, you're looking at buy, that may be in the short term, 2.9 may be in the short term a kind of target that one can look out for, on weekly. The way it's moved, that I think that's like a likely target. We'll come down to the daily time frame. Okay, so this how it is on daily time frame. We have daily clearly as a buy. So if we're looking at this as an impulsive move, this could be the main wave one, wave two, and this is wave three in effect. Of course, wave three is also subdivided into 5 waves too. So in wave three, you also have a sub impulse wave of wave one, wave two, and then you have wave 4, and then you have final wave 5 up. So that's what I'm thinking. This kind of structure is like the main wave, then you have the sub wave inside, so you have like wave 4. So we'll see how it plays out anyway. So we'll see how it plays out. I will be looking for opportunities to buy, and I suggest you do the same. So that's that for those two pairs. On 4 hours, this is how it looks. So 4 hours, maybe you could use this level here, around this level here, as an opportunity, as a stop. You get maybe a break of this level, you use it as a stop in the short term. Although on the daily time frame, we don't really have any clear immediate stop levels except here, which is way, way down. That will be a too much stop. But in the short term, if you're using 4 hours, you can use that as like at least a short term stop for your trades. So we'll be using that and watching. So if this session has given you value, please hit the subscribe button, like and subscribe, and I'll see you in the next one. Thanks for watching. Bye.